Hey everyone, welcome back. Let's do our live CPI numbers tonight. Very interesting information happening on the technical side of things, but yeah, let me know if there's any issues with the connections. Monitoring the connections at this point in time because we still have a little bit of an outage in the area here. But yeah, I think connection should be coming through okay. But if there's any issues, do let us know in the chat, and then we can respond to that, and we'll take a look at the situations. But this seems to be coming through okay from my side, and we'll get started on tonight's live trading session, which is going to be our inflation number for January numbers. Yeah, that would be last month's number. Okay. Let's get started with a quick disclaimer. Any opinion discussed in this webinar or linked to this presentation is provided as a general market commentary and does not constitute investment advice. News trading involves risk due to high volatility. Market reaction to news can be swift and unpredictable. So it could lead to high trading risks and obviously delays in order executions if liquidity dries up as well. So be very attentive when determining the volume of your transactions and consider all possible risk factors. All right, just a little bit about myself. My name is Vera Injera, and I've been a full-time trader with over 20 years of experience. I've been a Forex and technical analyst since 2007 for several global brokers in the US, Australia, as well as Japan. My expertise is in the Ichimoku Kinko Hill technique, and I've been invited as a guest speaker at Trading Investing Expo across Australia, Invest Fair in Singapore, as well as the ATA and the APTA conferences, which is the Australian Technical Analyst Association, which is where I'm based on. Okay. All right, I'm going to show you the code for those participants tonight, which is TW deposit bonus, and that's going to be 100% deposit bonus. I'll show you the code as per usual, and then you should already have access to the private Telegram channel if you registered through the through the website. You should be receiving that on your email, and if you have attended previous sessions, then you should already have that link to the Telegram channel. But if you don't, and you watch this maybe a little bit later, you didn't have time to register, contact the customer service team and they'll be more than happy to give you the link for the Telegram channel. Okay, so this is the code. It's from 2025. So make sure you use the code when depositing into your Octa trading accounts. It is valid until the 31st of December 2025. All right, so we're going to take a look at some theories first into what the inflation is. But I think it is a very interesting expectation in the market tonight. I just want to give you guys a little bit of a context into what things are and whether or not it is actually going to have a lot of impact into the market with what Jay Powell has been saying yesterday. And I think the hearing obviously continues tonight. I think it was Senate tonight, it was House. But yeah, they're not really in a rush to start cutting interest rates again. And it sounds a little bit more on the hawkish side. I think they might pause for a little bit and kind of look at the situation here. So yeah, I think the inflation number here, there's a little bit of a strange movement, at least from a technical perspective here, and we might have to look at things a little bit differently. It's not going to be a simple straddle like how we normally do things for our live trades, so it is going to be a little bit different. Okay. All right, so I'm going to go through some theories first. Obviously, we'll talk about the inflation first for those that are new here and are wondering what is inflation. And then what we're looking at tonight as well, what's the CPI, what's the core CPI, and then we'll take a look at the live trades on the CPI itself. Okay, so what is inflation? Inflation is basically the rate at which prices for goods and services rise. And the most commonly used inflation indices are the consumer price index and obviously the core CPI numbers, or the core inflation numbers. That's basically what central banks are going to be focusing on, which is the core numbers, while us traders are going to be looking at the headline inflation, which is the CPI numbers. Okay, so again, with inflation, it is going to continue to go up. Okay, it's just at what rate it is going to go up. So I doubt we are actually going to be looking at prices coming off unless something pretty drastic happens in the world there. But so far, in terms of inflation, the value of our money has been decreasing every single year, and that's the reason why funds or banks are basically looking at investing monies to kind of beat inflation. So we're going to be looking at inflation as a constant. It's always growing. We're just wondering what is or at what pace the growths are going to be. Okay, so what is the consumer price index? It is a critical indicator of pricing pressures in the economy. It provides you with a gauge of inflation. So when we talk about inflation, it always refers to the CPI, the consumer price index mainly. Obviously, there are other inflation measures as well, like PPI or the PCE numbers. But when we talk about inflation numbers, we refer to the consumer price index. This is basically how much you're paying for goods, and typically the CPI, we measures the more of the basic necessities rather than luxury products or anything like that. So it's like your soap, your shampoo, your food. These are going to be part of your CPI numbers. So Forex traders, it is a very important event for Forex traders to look at this because changes in the CPI can lead to changes in monetary policy conducted by the central banks, which can either strengthen or weaken the currency against their rivals in the market. We're just not talking about specifically about the US dollars here, although tonight it is going to be the US CPI numbers. It will impact the US dollar, but every country gauge their inflation based on the CPI. Okay, so the CPI, again, it measures the cost of living, includes broad range of goods and services purchased by consumer. It includes international or personal consumption items. So if you're importing stuff, then it will be part of your inflation measure here. Scope excludes changes in interest rates or costs, right? And the PPI numbers, which is going to be released tomorrow, that's going to be on the producer side. So the CPI is consumer side. That's how much consumer are paying for stuff. That's us, right? If we go to the supermarket, we buy our groceries. That's what we're measuring here with the CPI numbers. The PPI, it's called the Producer's Price Index, or the PPI. It basically is the opposite of that. It measures how much it costs to produce. So any changes in the PPI, if it's extreme, that's going to have a direct impact on the CPI numbers as well. But PPI doesn't mean the changes are going to be immediate on the CPI. Sometimes there are other factors as well. So we get PPI released before CPI sometimes, some months, not all the months. A good indication, but it's not 100% guarantee that if the PPI goes up, the CPI has to go up with it as well. Okay, so take this two index as two separate index. Okay, you just don't consider, all right, CPI number is high tonight, PPI will be high tomorrow. It doesn't work that way. Okay, so the PPI, it measures real growth in terms of output, includes items produced for personal consumption. It doesn't include imports, right? And encompasses services with prices including an interest rate component. Okay, let me just write down the chat. But yeah, if you guys have any questions regarding what we're talking about, feel free to stop me or type in the chat, and I'll take a look at the chat later, to answer any questions if there's any. Okay, so let's talk about core inflation. So core inflation is it's basically core CPI. Okay, it basically refers to changes in prices of goods and services, excluding those from the food and energy sectors. When we talk about the food here, we're talking about fresh produce, and the reason why we're taking fresh produce and the energy sectors out, they tend to be more volatile. Okay, there's a lot of changes. There's a lot of things that could impact short-term energy prices. For example, conflicts that could impact energy prices. We have seen that in the past with Ukraine and Russia, as well as conflicts in the Middle East. It does have a huge impact into energy prices. It does cause a lot of volatility, and high energy prices obviously could push inflation up, right? But the core inflation measures the inflation without these items included in that. So this is the reason why central banks are looking at the core numbers, because the core numbers, it's really more or less the underlying inflation. The headline inflation can change drastically, but in terms of the core inflation, for the change to happen, it doesn't change drastically, month to month. Okay. So also fresh produce, that's going to be excluded. That's part of the food that's excluded there. So fresh food are going to be excluded because it could be seasonal. Okay. Core inflation does still include, for example, canned foods. Those are going to be included in the core inflation, but we are excluding fresh produce, for example, meat prices, um, fresh vegetable prices. Those are going to be excluded from the core inflation because, weather could affect prices. Seasonality could affect changes in price that could actually push or lower inflation down. So yeah, excluding these volatile items gives us a more stable look at the inflation. That's the reason why we call it core inflation, which more or less means the underlying inflation, which is the main focus for the central banks to be measuring inflation with more accuracy, less noise. Okay. All right. So I want to talk about the context on the stuff that we're actually looking at tonight. So the theory was pretty simple. We got through the theory pretty quickly. And, I want to talk about what we are anticipating tonight. So let's take a look at the CPI first, the inflation rate year on year, or the CPI year on year. That's the headline inflation. And that's what we're going to be focusing on. Take a look at the consensus here. We're expecting inflation to not move a lot at 2.9%. Forecast is also at 2.9%. Morning, Chucks. How are you? Literally right now, it's morning. I just went past 12 a.m. here. But yeah, I'm on the other side of the world right now, and no surprises here. Being so far away from anywhere else, the internet here, it's pretty bad. Okay, but yeah, we are taking a look at a consensus here on inflation at 2.9%. I don't think we're going to be looking at this. I highly doubt that we're actually going to get an inflation that is unchanged from last month. So, a very interesting number to look at. And this is, in all honesty, a little bit problematic for us as traders because there's not a lot that has been priced into the market. So if the number exceeds 3%, for example, it could cause a lot of volatility in the market. If it comes out as per consensus, then yeah, we're not going to get a lot of price movement. So this is actually going to be a very unique inflation consensus here because market, if we take a look at the consensus and the forecast here, it is stable at 2.9%. I highly doubt that we're actually going to be looking at 2.9% because if we take a look at the expected change per month, previously we got 0.4%. I don't know if we're going to get a revision on this or not, but the consensus and the forecast are actually lower. So changes per month, it is at 0.3%, and forecast is at 0.2%. So we could actually be looking at a lower inflation number here. Now, if we take a look at the core expectation, the core expectation here is for a lower core inflation, 3.2 expected, consensus at 3.1%. So expecting a 1/10 drop on the core inflation here year on year. However, the core inflation rate month on month is expected to go up to 0.3%. And this is the reason why, I'm looking at this and really thinking we might get either market not moving once the inflation number is released, if it's as per consensus. If all four of them are as per consensus, then we're not going to get any movement at all in the market. Okay, so just keep that in mind. And it's very rarely that we need to look at all four, but for tonight we are actually going to need to look at all these four numbers because we could get a little bit of a mixed number. We could get a lower inflation rate, we could get a lower headline inflation, or the CPI numbers. We could get a lower CPI, we could get a higher core CPI, or it could be the other way around. We could get a higher headline CPI numbers, and the core inflation could actually go down as per consensus. So this is where we need to be a little bit more cautious. And I think market is doing some last minute adjustments to a certain degree because I think there's a little bit of a disconnect into a lot of the currency pairs that we're monitoring. For example, the euro itself, it's not really positively correlated to the sterling a lot today. In fact, the daily correlation for the sterling and the euro, it is actually below 0.7, and that's actually pretty low. There's a little bit of a disconnect between the two of them, so we need to be a little bit more on the careful side. It could be impacted by the UK GDP numbers that was released today as well, earlier. That could have an impact onto the movement on the sterling itself. But if you take a look at the strength on the US dollar versus all the other major currencies, it is unstable at best at this point in time. So really, I doubt, I doubt that we're actually going to be looking at the consensus as it is. I think we're going to get some hits and miss on the consensus here. But I'm really anticipating that the core CPI numbers and the headline CPI numbers might go the opposite way. And that could cause a lot of volatility in the market. All right, so we got a lot of time, and I want to prepare a little bit, and I want to show you what's been going on here. We'll come back to this in a minute here. So the Euro USD, as you can see on the 50-minute time frame, it's already starting to move. Now, is it going to create that corridor of volatility? It might. I was preparing for it. It wasn't moving until just about right now. If we take a look at it on the small time frame, you can take a look at it on the 5-minute time frame. It only started moving about 50 minutes ago. Okay, so the 50-minute time frame, I think we started breaking exactly at the hour there or before the hour. But right now on the hourly time frame, you can see the drop there, and this channel here is no longer applicable. We now have that corridor of volatility that we need to monitor, and it's pretty huge, right? In terms of the range that we have here, this is basically what we are anticipating at this point in time. So range-wise, I believe we are looking at about 33 pips. I think that's reasonable, but we're looking at volatility developing right now, and obviously we still have 12 more minutes to go. And if price breaks out before we can even straddle this, that means we have to just let go and move away from it. But for now, this is still well contained. The sterling is well contained, but one of the concerns I have for sterling here is that the range is actually widening up. It's actually opening up, and I don't like it when the range kind of open up like that. It will basically mean that there's a high chance that we might actually see a lot of volatility. We might actually see a lot of whipsaws in the market. Hopefully we didn't get that. Hopefully we see a number that's not mixed. At the very least, it would actually push the market in one direction. But if we have a mixed number, then be prepared for a whipsaw to happen in the market. And depending on the situation, obviously we're not placing our positions right now. We're going to be placing the positions in, I'll wait until 5 minutes before the CPI numbers, but I just want to run down a few things with you guys here on what the condition is. The Aussie USD still well contained. If we take a look at it on the hourly time frame, but if we take a look at it on the 50-minute time frame, you can see the downward pressure that we have here. And with the downward pressure that we have, obviously, if we go by the 50-minute time frame, there's actually a resistance trend line to watch out for. It means if it breaks to the upside, for that to happen, the inflation number in the US has to go down. We need to look at the headline inflation below 2.9%, and we need to look at the core CPI to come in as per consensus at 3.1 or potentially at 3% or even lower than that. That will send the Aussie USD up. And this time around, if we take a look at the range that we have on the Aussie USD and resistance, if we do break resistance and then we break the range that we have on the hourly time frame, it's not that significant in terms of range, but at least we have that consolidation phase that we're looking at here, in the past couple of hours. So very interesting to keep an eye out on this one here. Dollar yen, on the other hand, we have been looking at dollar yen recovering, and this is basically on the back of some profit taking on the Japanese yen. Obviously, that's number one. We're also looking at some key levels, as prices approaches 150, which is more or less a psychological level on the dollar Japanese yen. That triggers some profit taking happening as well. We also got comments coming out from JP yesterday that they're not really in a hurry to start cutting interest rates. Obviously, that drives the US Treasury yields up, and that drives the dollar yen up. We do have a little bit of a small flag. It's not that significant because if you take a look at the degree here, is actually pretty flat, but nevertheless, on the early time frame, we are anticipating a potential for a bullish flag to break. If we get that, then it kind of counters what we are anticipating on all the other currencies. So just keep that in mind. I'm really concerned that we might get a number that is conflicting, and with the headline inflation at 2.9% and the consensus at 2.9%, forecast at 2.9%, it's really difficult to look at the current condition here. So basically what the market is anticipating, or what analysts is anticipating, is that they don't expect inflation to go overshoot above 3%. But if we do get that overshoot above 3%, I think that could push the treasury yield up again. That could really pressure a lot of all these major currencies. That would really strengthen the US dollar. It could push down the euro, the pound, the Aussie, as well as the Japanese yen. All right, the other thing is I want to talk about is gold. Now, typically we would straddle gold, but at this point in time, it's very hard for me to straddle gold. I don't think we can actually use the buy stop, sell stop strategy purely on gold. The situation on gold hasn't changed. It has created an all-time high yesterday. It was at very close to 2.9. I'm not going to be looking at long-term positioning because the overnight swap for shorting, it's going to cost a lot more, and this is more on the LP side, charging that. So have to factor that in as well. But yeah, on gold at this point in time, it's just in the channel to the downside. We're not going to be able to straddle this, and this is on the 50-minute time frame. This is probably a much clearer picture that it's hard to pick this up unless we break resistance to the upside. If it continues to break support, it's going to be really tough to say, yeah, let's go short, for the same reason that I just discussed just now, that short selling gold, it does cost a lot more at this point in time. Now, again, if you try to short this as well, how far is it going to go? Where are you going to be targeting? Just that much? That's not going to give you a good risk reward ratio, because your risk is going to be at 2,908. That's going to be a stop loss if you try shorting it. And your target is going to be about 2,853, which is $20 versus $30-40 for a stop. So your risk reward ratio is actually going to be flipped. You're probably going to be risking twice for half the reward. So short selling is out of the questions for gold at this point in time. I think we're going to be looking at a lot of price movement happening in the market in the next 5 minutes or so. Dollar Canadian is another one that I am extremely concerned. We're just not really breaking out of the range that we have here on Dollar Canadian. In fact, this range was the same range that we were anticipating since NFP numbers. So if you still want to trade Dollar Canadian, the range is just a lot bigger. If we take a look at the range here, this has been stable inside that 100 pip range. So if we have a buy stop and a sell stop, your stop loss is going to be 100 pips minimum. So this is another one that I might actually skip. I'll wait for the data and see if the market reacts to it. But dollar Canadian, we're not going to be straddling the dollar Canadian. The risk is just too big for that. The other thing is the dollar Swiss. Dollar Swiss on the early time frame, obviously not consolidating at all. In fact, if we take a look at the dollar Swiss here, and we kind of measure that push here on the dollar Swiss. Let me just change that so you guys can actually see what's really going on here. So with the dollar Swiss, we are at about 50% of a retracement here on the dollar Swiss. So this is not a clear indication of a breakout strategy here. Definitely not going to be anticipating a breakout strategy. We could potentially look at failures, maybe about 91.25. Let's just mark this down at 91.25. But yeah, we're going to be leaving 91.25 there. And in terms of support here, I'm actually going to clear that off. But in terms of resistance, I'm still going to keep 91.50. But we could actually lower it to about 91.40. So it needs to break 91.25 and then 91.40 to be, to have more of a consistent push higher on the dollar Swiss. All right. Yen crosses, we're going to ignore yen crosses. The US 30 right now, we're probably going to be waiting for the market to kick off. I think a half an hour after the market kickoff, we're going to get another hearing from JP. That could move the market a little bit. NASDAQ, we're probably going to be actually looking at a little bit of a symmetrical triangle. It is more or less still a symmetrical triangle at this point in time. But yeah, you can see with the formation here. So NASDAQ and the US 30, I'll probably wait until the data is released. Now, let's position ourselves here. So we're going to trade the 4 majors. Okay. As I said, I do have a little bit of an issue with the connections at this point in time, and I think we just got disconnected a little bit. Hopefully, we're not skipping too much. No, I do have connection issues since last night, and we had a nationwide outage here in terms of the broadband network, which is the NBN network here in Australia. Yeah, it's so it is actually partly on my side. Upload speeds are severely affected, and connections here are a little bit patchy. We do get blackouts here and there, but yeah. 1.0390, that's going to be your buy stop on the Euro USD. And for the sell stop, you want to have it at 1.0350. So we're looking at about 40 pips range on the buy stop and the sell stop on the Euro. I'm going to put this a little bit wider. And the reason for that is I don't want to get whipsawed by the market here. On the pound USD, in terms of the buy stop, I'm happy to go with the 1.2465 level for the buy stop, and for the sell stop, we do want to have it a little bit lower than where we are right now. I want to have it below 1.2430, right? That would be the range that we have for the sterling at this point in time. So we got the Euro USD. Let me go quickly. 62.86, and a sell stop a little bit lower. 62.71, and hopefully connection is back on. All right, so yeah, as I said, it triggers the Euro USD and the pound. I said, we're not anticipating an inflation as per consensus, and a lot of the market analysts out there are not anticipating a higher inflation. We just got a higher inflation here. Core inflation has gone up to 3.3% instead of going down, and also the headline inflation is now at 3%, is higher than the 2.9%. So we got Euro USD and Pound USD. This is pretty much clear, one directional here. I think we got filled in a little bit lower than what we were anticipating here on the Pound USD. I think we got filled in way too low here. But that's the best. If you haven't got into position on this one here, we'll wait for a little bit of a pullback. And dollar yen, as we were looking, it could be more or less a bullish flag, and that's basically what we got. So any pullbacks that you guys have, I would really not go against the dollar strength at this point in time. It's really hard to look at the inflation number here. So let me just read up the inflation number here. The core inflation rate month on month has gone up from 0.2 to 0.4%. Core inflation rate year on year, core CPI has gone up from 3.2 to 3.3%. Changes per month on the CPI has gone up from 0.4 to 0.5%. Headline inflation 2.9% to 3%. So this is all above the market consensus, and this is the concern that we have. At the very least, it's one directional. All these data are supportive of an inflation that's actually heating up, and giving JP tonight more reason to be hawkish. So Aussie USD, we were a little bit late onto the Aussie USD, but if we take a look at the current positioning on the Aussie USD, if we wanted to go short on this one here, we could, I think, once we clear off 62.50, at least on the 15-minute time frame, we will go short on the Aussie. For gold here, I'm actually holding off shorting gold, so I don't really want to be shorting off gold. Dollar Canadian, as I said, it's very hard for this one to break the range because it is a 1 cent range. The dollar Swiss, it has surpassed 91.40 and 91.25, but I want an hourly close above the 91.50 level for me to actually start positioning myself on the dollar Swiss there. The US 30, obviously, this is going to be very highly affected by the market here. I think the resentiment here, we're going to be looking at yields in the market going up here. So just keep that in mind. So if you got Euro USD and a Pound USD, I think this is trade is more than enough. This one here, I got filled in way too low, but if you got, you'll be in a good position because you'll be leading the market by about 25 pips. You'll be in a good position because you'll be leading the market by about 25 pips. So that would actually be good. Yes, I'm looking at the chat here. I do really apologize on the connection issues here. I'm just cutting in and out. So hopefully the stream it's not cut off at the wrong time here. But yeah, let's wait a little bit. I'm not really in a rush, but if you are in a good position here, I'm okay moving your stop loss to break even. Just letting the trade run. So if you get a good price on this one here, I didn't get filled on a good price on the Euro USD and a Pound USD. It could be partly could be because of my connection issues as well. But yeah, I'm just looking for prices to kind of pull back a little bit. And in fact, if we take a look at the movement here, I am actually more concerned on the US 30 here. I think that for the US 30, the reason why I'm actually really negative on the US 30 here, I think we talked about this before, and I mentioned this in the outlook specifically, that we were looking at a little bit of a failure here at around 45,000. So it wasn't able to kind of push beyond 45,000. And if the yields goes up tonight, if the yield continues to go up tonight, I think it would look, I'll be honest with you, if we take a look at the inflation number here, it should send a little bit of fear into the market. I think we could get a little bit of a risk-off sentiment when the market kicks off, when the US market opens at about an hour's time. So I would actually be more prepared to go short the US 30 at this point in time. This is something that could actually move a lot tonight. So I think this we're not talking. Look at that. It just went crazy here. So yeah, the US 30 is going to be highly impacted. Any pullbacks that you see on the US 30, I think that would be an opportunity to go short on the US 30. Right, this one here is such a huge miss, but the stock market, we're probably going to be looking at the VIX index shooting up really highly tonight. No one is expecting this. It's, as I said, we were looking at a pricing and the current conditioning, and I expect high volatility. And the reason why we expect high volatility, it doesn't make sense for inflation to remain flat at 2.9%. And I think market is downplaying that inflation wouldn't go up to 3%. But we're looking at 3% right now. This is kind of the threshold, and the core CPI has continued to go up. This should send the yields up tonight. This should send a lot of fear into the market. I think the stock market could actually have a little bit of a red day, and any pullbacks on this one here, even on the short term, I think this is still a good opportunity to go short on. It just doesn't click anymore, right? I don't have a technical reason to go short on gold at this point in time. There's no technical formation to go short. We're not forming a head and shoulder pattern or anything like that. If you take a look at this one here, obviously it is a descending channel that we're looking at. So there's actually a higher probability that this could actually be a continuation pattern here. And if we go into the daily time frame, do we have confirmation that this is an evening star? Probably not. If we take a look at the 4-hourly time frame, are we looking at support building up? We could look at support building up on the 4-hourly time frame, which is about this area here around 2,850 level. That could push it up. So could JP be more hawkish? I don't think he's going to bring it up, specifically that the inflation number is going to be high. But if someone questions him about that, then he's going to say, look, that's a good reason why we're just not cutting interest rate aggressively, because there could be a bounce in interest rate. So, there could be a bounce in inflation. So, yeah, could JP be more hawkish tonight? if this is an information that is going to bring to his hearing, I think it would actually be brought up as well. Then yes, JP could be more on the hawkish side. So yeah, is it a good time to swing the position? So if we have a short run pound in euro, we could make it into a swing. Yes, I think we could turn it into a swing if you have your risk position. And again, just a reminder: if you're looking at this and you're looking at the trades are not doing well, it's not that trades are not doing well. I got filled in at a pretty bad price from where a buy stop and a sell stop are. So yeah, if you manage to get in a good position, as I said, on the euro, you should get a little bit of about 20 to 25 pips a head start. On the pound USD, again, you're looking at about 20, 30, 40 pips head start from where the supposed sell stop is going to be. I would say move your stop loss to break even. Okay, if you are ahead by more than 20 pips, I want you to move your stop loss to break even, and I would just write it out. Okay, I'm just waiting for the 15 minutes candle to kind of complete itself. But at this point in time, if we take a look at the positioning that we have here, so let me just bring this up, and if we take a look at it on the hourly, you take a look at the Euro USD here. We're now below pivot. Now, because we're below pivot, we do have a little bit of support building up here. But if the hourly on this hour here, it clears off support 1 on the daily here, that would be below 1.030, 1.0310, 1.307, 1.310. If it clears off 1.310, if it closes below the daily support here, then yes, take a look at the RSI. It has dipped below 40. RSI is at 33. The stochastics has a lot more room to go. So I think that there could actually be a lot more room to go here on the Euro USD. So any pullbacks on the shorter time frames, if you manage to get in on the Euro USD, then take a look at it on the 15-minute time frame. Take a look at the high of the volume here. Obviously, this is a volume breakout that we're looking at here. So really just waiting for this one to continue to break down. And the RSI is obviously on the extreme right now, especially on the, if we take a look at it on the 5-minute time frame, volume is kind of slowing down a little bit. That's to be fair. But yes, I think that could actually be a lot of push to the downside against the US dollar. I think what we're looking at here could be a case for the FOMC to be a little bit more on the hawkish side there. So just be mindful about that. All right. Pound USD drop is a little bit more on the extreme side. Again, on the early time frame, very similar situation here. We need to clear off the support one, but I think we could clear that off. There is still room on the stochastics. The RSI is dropping below 40 at this point in time, and the drop is pretty extreme, right? We went from above 60 to below 40. Right now at 34, at least on the early time frame here on the pound USD. So, yeah. If you have a short in EU since yesterday, NFP, can I target at 1.02? By all means, if you want to swing it, you can target 1.02. But if you go by the okay, I'm switching connection here. This is more or less a backup connection. I think the quality on the video might be a little bit worse, but I'm not sure how we're streaming here. But it's better than us getting stuck. But yeah, I'm basically on a backup connection here. And again, I do apologize, but we do have the national outage here on the broadband network in Australia. So a little bit on the worst side. But yeah, this is on a backup connection. So hopefully this is okay. But yeah, the Euro USD, we're going to be targeting 1.02. I think that would be possible on the Euro USD. Pound USD. Sorry about that, guys. No, it's mine. It's my connection. As I said, if you were here yesterday, we also had a pretty patchy connection here, but tonight is actually really bad. It's not the speed per se, but the connection itself is basically it's like there's someone with an on and off switch every few minutes or so. But yeah, on the pound USD, we haven't broken anything else on the pound USD. In terms of target, you're still going to be aiming for 1.23. But any break below 1.3, then yeah, you could actually send things a lot lower here. All right, so I'll be back online. Yeah, everyone's still here with me. So bear with me on the connection here, but hopefully we're doing okay. You want to know the upload speed? 15 Mbps national average for upload speed. It's not the download speed. It's more or less the upload speed. You know, I'm streaming. Obviously, the upload speed is basically what I need. And you know, the average we could get here, it's really 15. So yeah, very surprising for. Okay. So yeah, for inflation night. Okay, so I think we're back online. I do apologize. I'm just really going in and out right now at this point in time. But yeah, positioning wise, again, any pullback that you're looking at, we're not obviously not trading the fade here. I would actually be looking at a limit order on this one here, and let's do a sell limit on the Euro USD. A sell limit on Euro USD, I would put it at about 1.0350. 1.03. Yeah, I'm happy with 1.0350. If I can get a pullback to 1.0355, you know, even better. So yeah, I would do a sell limit on 1.0355. Now, in terms of stop loss, obviously I don't want to risk too much because any push kickback higher than 1.0390, that's going to cause us a lot of problems. So I'm going to have my stop loss at 1.0390 on this one here and take profit. Obviously, we want to go a little bit lower on 1.0250 at least on the Euro USD. So, all right, okay, we got the Euro USD. And obviously, if you take a look at the risk reward ratio, I do want to get a little bit of a pullback here. William is asking what would be the good place to get our limit orders on the Aussie USD. Very hard for this one to kind of push higher. In fact, I would be a little bit more on the cautious side because I'm actually more concerned with the floor that we have here on the Aussie. If we do break lower, then there's nothing else we can do. But for the Aussie, if you're going to be looking at a sell limit, you don't really look at the range up top there. We're really going to be looking at about 1.0260 level. That would actually be about the sell limit that we have on the Aussie USD, about 1.0260. That would be sell limit on the Aussie USD here. Is it the best currency to trade right now? Probably not. And with this sterling, you have to be a little bit more careful in sterling here because we still have that floor 1.23 to 1.2350. So a little bit more cautious if you're trading the sterling. Any pullbacks on this one here? What's going to be the sell limit on the pound USD? We're probably going to be looking at about 1.2425 level. That would actually be the sell limit. But I'll be honest with you, I don't expect price to pull all the way back up to 1.2425 on the pound USD. But you know, just in case, if you want to place a sell limit order on that one, then by all means, feel free. It will be around this area here where you see that small stop there on the pound USD. That would be where you want to be placing your sell limit on the selling. So be very strategic on this one here. But I really doubt that we're actually going to get a pullback on the selling, especially on how bad the condition is. The US 30 continues to drop down here. This is on the 15-minute time frame. This is going to be the main focus for tonight. If you want to trade tonight and you really want to go crazy, I think we're going to be looking at crazy movement, especially in the stock market. I think if we take a look at the yields and the VIX, it should be spiking up. If we take a look at the yields here, so let's take a look at the 10-year yield. It's already pushing up higher. For today, it's gone up from 4.55 to 4.65. So we're looking at about 10 basis points up on the 10-year Treasury yield, and the VIX, as we are looking at here, we should be looking at VIX pushing up a little bit higher. You can take a look at the pre-market on VIX here. It is starting to climb up. Are we gonna get a push above 20? Probably not. It's not that extreme. Like, I mean, it shouldn't create that much fear in the market. But yeah, if the yield continues to go up, it would actually create more or less a negative risk sentiment in the market. So I need you guys to be a little bit more on the careful side. But you know this, and that's if we are taking a look at the positioning on gold here. Again, I wouldn't want to go short on gold. How about setting long for gold for now? Yeah, this is something I'm actually taking a look at right now. It is still bouncing off the support one. With the stop loss below 2, it's far. 2850 is far, but it's very close to support too. I just don't have any reason to go long gold at this time. If you really want to go long gold, I would caution you to at least wait for the breakout of this resistance trend line. It would put you in a much safer position, right? Unless you're aiming for short-term gains in the market, then yeah, could you go long gold right now? You could. It's just that it's very risky. You can see where it's staying with inside the channel that we have here. If we go long and your stop loss is at 2850, what are you targeting? That's the problem that I have here, right? What are we targeting? Are we going to be targeting 2900, or are we targeting a new high at 2950? That's the question that's really hard to answer, because if I were to go long right now, where's my stop? If you put it below 2850, that is going to be so far away. Where are you going to be targeting? Because as long as it stays in the channel here, if it doesn't break the channel, then you actually have a lot of resistances, and all these resistances are not going to give you a good risk reward ratio, unless you that's probably the only one that's going to give you 1 to 2. The rest, it's barely just going to give you. But yeah, if you want to go long on gold, you could. Just don't go crazy on gold here in terms of pricing, because I think the volatility is still drying up here, and it does take a while for the order to get executed as well. You can go all the way to 2850, but if you really want to go to 2850, yeah, that's the max you would go, right? And also for target, I think once it breaks higher, then yeah, I would go for 29, about 2900, 2905. Those are going to be options. I'm happy with any of those, but that's pretty much it. What else can you do with this one? But from a technical standpoint, I would be a little bit more patient, because one of the main reason is from my side as a service provider for you guys. It is the worst case scenario. So yeah, if you want to go 10-year yield will limit the gold movement. We don't know. As I said, we could see a little bit of a run to safe haven for gold, right? And if that happens, obviously, then we could actually see a little bit of a run up for gold to the upside. That's the reason why I don't want to go short gold. But yeah, would I go long gold? It's a much better positioning if I were to go long gold at this point in time. Although from a technical perspective, it's not that safe, because I really need on everything else. Okay, so it's really weird from my side here is that I'm getting connections, but I think it's fluctuating. Okay. Okay, let's do this very quickly. I think if you want to go long gold right now, I would be okay to go long. We got 2 minutes to go, and once the 2 minutes closes on gold here, then yeah, I think we could push for gold. So I'm turning off the YouTube stream from my side just to improve connections here. But if you want to go long gold right now, I would prefer to go long gold at this point in time rather than going short. It is going to be a little bit early, but you know, hey, it's okay. I think we are in a much better position to go long gold rather than going short gold at this point in time. But yeah, everything else should be still as planned. I wouldn't go against the US dollar, but gold is going to be a little bit of different condition because the concern here is that if the higher inflation causes panic in the market tonight, gold could actually benefit as a safe haven. So I think it would actually move differently. And again, the cost of short selling gold, it is a lot higher. So I don't think we're going to be looking at a lot of sellers in the market. So yeah, I much prefer to go long gold. If you are in a position for gold, feel free to go long gold. And guys, I really do apologize for the connection. It is exactly, the stream is just like on and off, right? I'm actually really panicking here right now. Don't you? I'm actually streaming already at 720p. But yeah, the connection is in and out. Okay, looks like we are stable as it is. Do you guys have any last minute questions for me to take a look at in the market? But in terms of positioning here, we got limit orders placed for the euro, the pound. We're going long gold at this point in time. And again, guys, I do apologize. I actually haven't come across this problem, and you know, it has been a really tough week for me to work on a lot of the stuff here, and it does. You know, I'm actually panicking as well. You know, I was anticipating the worst case scenario could happen tonight because the outage was just getting worse day by day, and it just happened. Last night we were slow on the upload, but we're not like an on and off switch, but we just experienced a lot of on and offs. And I'm working with 3 internet providers at the same time at this point in time, and I'm just switching between the 3 of them just to kind of keep the stream alive. So I do apologize. This is on our side, it's not your side, and definitely it's really a technical difficulty here, especially for me as well. Yeah, I think in the past 4 years that we have, you know, I've been streaming here, I haven't had any issues like this. This is one of the worst issues because we do actually have the national broadband network here having a national outage ever since Monday, which is yeah, bingo, which is when I basically arrived back here in Australia as well. All right, good. So all good on the positioning here. I much prefer to go gold, long gold and gold, but Euro USD and pound USD. If you had your position at the buy stop, at the sell stop that we had, I want you to move your stop loss to break even, let it run. If you haven't had a position, then wait for a limit order to be picked up. If we didn't get picked up on a limit order, you know, you could do 2 different things here. We could create a new sell stop if you want to. Right, this new sell stop on the Euro USD is actually going to be below 1.2375. So I much prefer if you have it at 1.2370. Sorry, on the pound USD. On the Euro USD, you could have a sell stop below 1.03. So that would be below 1.03. That would be a sell stop if you want to, just in case we didn't get the limit and the market just continues to slide. So we have to think about 2 possible scenarios here, whether or not we could get a pullback, or are we going to just continue to break down even lower? So I would really go for 1 sell limit up top and 1 more sell stop below the range here. At least on the Euro USD, you want to have it below 1.03. On the pound USD, you want to have it below 1.2370. On the Aussie USD, it's too late on the Aussie USD for us to have a sell stop. If you want to go short, you can go short. It's just that the risk at this point in time is going to be so large. Unless you're trading on the daily time frame, it just doesn't make sense. But if you're trading this on the daily time frame and you go short Aussie, your stop loss is going to be about 100 pips, just likely about 63.30, and you would be targeting a lot lower. We're going to be targeting 61. This is actually going to be a swing trade on the Aussie USD if you want it to be. especially on the Aussie USD. But is this the best currency to be trading? I think the euro and the pound would probably give you a much better option, as well as on gold, right? And you see how crazy this is? We're wrapping this up and the connection is now stable. So super annoying, right? All right. The other thing with the dollar yen, I want to caution you on the dollar yen here. This one here is not stable as of yet. We did see this run to the upside, but if we take a look at the dollar yen here, especially on the daily on the dollar yen, right? Let me just show you the dollar yen here on the daily. We're actually inside the Ishimoku cloud. Tenkan-sen is actually quickly approaching. That's actually at the Kijun-sen is actually at 155. So be cautious going long on the dollar yen. We could be very limited in terms of how far we can go on the dollar Japanese yen. We could get capped off at 155. So just keep that in mind. Okay. All right, guys. If there are no questions, I think we're pretty clear in terms of our positioning here. And do not go against the US dollar strength at this point in time. The market wasn't prepared for the inflation data that we had just now. I would focus a lot more on the index if I were you. And especially if you take a look at the pound USD, I think this is potentially closer to more of a break to the downside. If the sell stop hits, then feel free to take off the sell limit. But that's pretty much it. All right. Okay, guys, I think we had a good trade on the day, except for the connection issues here. But yeah, it decided to just go stable as it is right now. But again, if you had a good position, if you get a good entry, I want you to move your stop loss to break even, let the trade run. You want to add into that. Make sure it breaks a new low on the Euro USD and the Pound USD before you start going short again on that one there. Other than that, gold, we're probably going to be looking at a little bit of a panic tonight. So might want to go long gold. Okay, so again, focus is going to be on the USD and NASDAQ tonight, so just keep that in mind. If we are going to be looking at panic in the market, then I would go for it. Okay, all right, guys, let's wrap it up for tonight. Thanks for hanging on here with me through the on and off switch that we have been experiencing tonight. Hopefully we didn't get this again on the next live trading session. And good luck with your trades for tonight, and I'll see you real soon.